Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. One of the hardest thing about investing is to find great companies. What I mean by great is it's not just the company that is, that sells amazing product, but also increases that revenue every single year. You want a company that have a solid net income every single year. A company that is making enough money to pay us some dividends if possible. Okay, some of these companies obviously do not pay dividends, and that's absolutely fine, but do they actually have a growing revenue, growing net income? Okay, and if they're paying us a dividends, do they actually have enough free cash flow to pay that dividend? Is the EBITDA growing? Is the company actually have a profit margins that are growing? All of these things are something that we're going to focus on today, and we're going to look at this company. The company I'm going to talk about today is Broadcom. This company has been in my portfolio for a very long time, okay, and I haven't actually added to this company for a long time. In fact, I will show you exactly right now before we move on. So as you can see, I've been getting dividends from this company like £14, £13, £12, £11. Actually, this is interesting, right? I actually have had 5 shares, as you can see there, for a very long time. Okay, so July last year, they paid me £11. Then October of last year, exactly the same shares, I've got £11.30. So it increased a little bit there. Then dividends actually was increased again in January. Still have the same shares, $12.92. Okay, then $13 and so on. And then so this is what I mean by growing dividends. This is the kind of company that I love to have in my portfolio. And the last time I actually bought these shares of this company, okay, was May of last year. So I haven't actually bought anything for almost a year, and I've been buying this company since, I think the first time I added to my portfolio was December of 2020. Now, what I want to do today is, and what I was doing, right, this video genuinely was just for me today, because I was doing a bit more research. Because what I like to do is, after a while, if I'm adding to a company, I like to go back and just revisit their website, look at the 10Ks, look at their company, and not 10Ks. I normally look at the last 2 quarters and see if there's anything that I need to worry about, anything that I need to know, and so on. And that's what I was doing this morning. And I thought, you know what? This will be interesting to share with the community, and instead of just me just doing that research. So I'm going to share this with you. I'm going to try to make the video as short as I possibly can. But before we get into the video, let me talk about one more thing, okay? If you are new to the channel and you don't know who I am, okay? My name is Mahmoud, and all I'm doing here is just trying to be transparent and share everybody here every single week what I'm doing with my portfolio and what I'm buying and selling. So I'm not a financial advisor, but I'm just sharing my journey. And every single company that I have in my portfolio is Sharia compliant, and that's something that is really important to me. So if that is the kind of thing you would like to see, okay, and you would like to actually know what's happening, just subscribe to the channel so you don't miss anything, and at the same time like the videos, so hopefully we can grow the community. Now, yesterday the interest rates, actually the not interest rates, the inflation report came out in the US, and it was like 8.5 or whatever it was. They were expecting, I think, 8.7, so it was better than that. And obviously for that reason, everything just went up. Okay, 2%, 3%, whatever. Every single company, especially the technology companies, were up so much because they were beaten down for a long time. Okay, in fact, the day before, a lot of them went down almost 4 or 5%. So they still haven't recovered from that. But yeah, so one little good news can be like what triggers the market to go crazy, and the next day is down another 4 or 5%. So it's still volatile. I think we're still gonna be like this for at least another, I don't know, 7-8 months, if not longer. I'm just not really. I don't really think it's gonna change that quickly. Okay, because remember, 8% of an inflation, that is very, very, like normally we're looking at about what, 2%. 8% is still high. So until it comes back down to earth, right, I think we're still going to be in a volatile market. So just keep buying, keep dollar cost averaging, like we said before. Right, let's get started on this company. So I went to the Broadcom's website, and you've got a lot of information. You've got events and presentations. If you've never done this before, this is really good way to know about the company. Okay, any company. So go to the investor section, okay, and then look at the events and presentations. You can see a lot of information here. So the first one, I'm going to look at the Broadcom company presentation, and then we're going to look at the VMware one as well. Okay, so This was reported July of 2022. I'm just going to quickly highlight some things and then move on to the next thing, right? So Broadcom, the whole basically at a glance is, so this year, last year, 2021, they had the fiscal year, they had a net revenue, okay, of $27.5 billion. And that is a huge, if you think about it, okay, a lot of the companies out there are looking about 4 billion, 5 billion, whatever, but this company is absolutely huge. I think it's over $220 billion market cap, so that's probably one of the reasons, right? And then you've got investments, okay, research and development investment of almost $5 billion. And I absolutely love that, because this is the type of company that needs to do these things, right? Because they can't just stay idle. You got to innovate, because it is a very, by the way, this company, I'll show you this, what they do in a second, okay? And they have a loads of patents when it comes to IP portfolios, okay? So almost 19,000 patents in 2021, which is really good. So what that means is when other companies want to use that patent, they have to pay royalty to this company, right? And the two categories they have mainly is semiconductor and infrastructure software. Before, this company was only based on was creating basically selling products on the semiconductor side of things, but lately they actually buying a lot more companies that are based on basically that do infrastructure software. So this is really good. So they're diversifying their portfolio, and as you can see here, it says 22 category leading semiconductor and infrastructure software divisions, which is really nice to see, right? So this company, as you can see here, came together and became one company in 2016, right? And all of these companies were individual companies that this company acquired over a period of time. So now, as you can see here, 2020, they haven't actually, the Vmware is the next one that will be included in this list. As you can see, I didn't even know basically until I think about a year ago that they actually own as well the Norton antivirus company as well, okay? So when you look at their revenue segments, you can see the infrastructure is growing, is actually nicely growing. I will hope in the next few years it will be about almost 50-50, okay? And that includes things like basically like the mainframes and so on, storage area networks and so on. And the networking side of it, you're looking at networking, broadband service, storage, wireless, industrials, and all of that stuff. Then you can see a lot of breakdown of like some of the networking or connectivity side of it. So they have do things like switching, routing, physical layers, optical interconnect, and all of that stuff. Then enterprise and so on. So you got a lot more information here just to kind of give you an idea of what the company is actually selling. And this is important because you then think, okay, are these things needed at the moment? And the answer is absolutely yes. Okay, as technology basically gets faster and things get faster, obviously we need these companies to innovate and create basically routers and things like that allow us to communicate faster, okay, download things faster, upload, all of that stuff. And then you're looking at the mobile device side of it, okay, and they work with a lot of companies when it comes to this as well. So from Bluetooth and from Wi-Fi and all of that, touch controls, all of these things are basically, they have something in there. So even your AirPods and so on, okay. Then you're looking at from automation side of things, okay, renewable and automotive. So this is, again, an industry that's still growing, okay, and still going to be needed in the next whatever years. So again, this company genuinely is in the right place, okay. And then you got the enterprise class solutions, okay, and this includes cybersecurity, payment securities, and all of that stuff. And then you look at their revenue, okay. So the net revenue for the last 5 years, if you can see here, 2017 was only $17.6 billion, and right now we're looking at about $27 billion last year. Gross margin is exactly this, and look at this, 63 to right now 74.5 percent. Then you look at adjusted EBITDA from 8.5 to right now 16.5. Free cash flow, this is what impresses me about this company. This is one of the reasons I invested in this business, all right. $5.4 billion to right now $13.3 billion. And then, so what do they do with that money? They actually pay us absolutely amazing dividend. This dividend grew basically compounding annual growth rate 43% in the last 6 years. So in 2016, they were paying almost about, let's call it $2. And right now you're getting about $16.40 for every share of this business that you own. And that is absolutely amazing. That's what you saw early. Okay. And then you've got a lot more information about the company and who they are, and then more about the data and breakdown of all that information. The other thing I want to quickly share with you is they now acquiring a company called Vmware. Okay. And Vmware is in the software, the cloud software side of things. Okay. And they also have a virtualization networks and so on. Okay. So this company is actually, I don't know if the deal is completely finished, but it's still in the pipeline. So one of the things I want to show you, there's a lot of information here that you can actually look at what's happening to this company. So their platform, what their platform consists of, so like phase 1, 2 and 3 and so on. And as you can see, virtualization pioneers and private cloud and mobility leader, multi-cloud and application platforms. All of these things are basically are part of their basically what they do. But one of the things that I want to share with you is this. Okay, so this is where Broadcom is actually heading. So right now, the revenue for this company, VMware, is $15.8 billion. That is January 20, basically, not January 23, sorry. This is basically their latest earnings report, right? And the latest earnings report for Broadcom is $27 billion. So when you combine these two together, okay, you're looking about $40 billion. So because they're now in the process, I think they almost got it. I think that, I don't know if they're still waiting for an approval or whatever it is, but they are in the pipeline actually to buy this company. So when that happens, okay, they will have basically the revenue will go up from 27 to $40 billion. So this is one of the things this company does. They actually acquire other businesses and so on. And then obviously there's a bit more information about VMware, what they do, how they do things and so on. So there's a lot more information to digest and how that's going to work and so on. And basically the whole purpose of why they're buying and so on. So there's a lot more information in there. So let's now dig deeper and find out basically whether this company is actually a buy, sell or hold or whatever we want to say. Okay, as I said early, currently trading $550 per share. EPS we're looking at about 20, and next year apparently is going to be 40. It's probably a lot to do with the fact that they're acquiring VMware. You don't jump for basically from 20 to 40 all of a sudden, but that's probably VMware effect. Okay, market cap $222 billion. It has economic mode, narrow economic mode according to Morningstar, and beta is not that high, okay, which is it's okay. It's quite volatile, to be honest with you. It's not as bad as some of the tech companies out there. PE is 27. The sector is right now 27.77. Okay, and price to free cash flow is basically 16, which is absolutely fine. So for me, that's absolutely no issues. To me, based on what this company has been trading in the last 5 years, this is actually below the average. Okay, annual dividend yield of almost 3%. Payout ratio is about 73%. Okay, in fact, let me just double check that. Yeah, their payout ratio is way lower. The website where I get that information from has a crazy payout ratios. Okay, we're looking about 50%, so it's not that as bad as that. Okay, 5-year growth rate about 43%. Dividend growth streak is about 11 years of paying that, increasing that dividend. And safety, we're looking about 67% according to Simply Safe Dividends. Okay, free cash flow $14 billion right now, almost to 14.5. 10-year growth revenue growth, we're looking about 28%, which is absolutely huge. And in its EPS is almost to 21%. When you look at profit margins, this is one of the things that I actually love about this company. Profit margins about 28, operating margins, we're looking at about 37 if I can talk. And then return on equity is 37 as well. The total return over the last 10 years, 32%. That's huge. Okay, current ratio above 2, which is really nice. We're looking for just anything above 1. And this is the important part. Okay, is this undervalued, overvalued? So let's see. 14%. So they're expecting 14% revenue growth every single year, earnings growth every single year in the next 5 years, right? Simply Wall Street is actually saying 13% undervalued. The price should be about 634. Morningstar 12% undervalued at the moment, fairly valued of 624. And then tip rank 26 or almost 27% upside. They're expecting almost $700 per share by the end of the year. Yahoo Finance 672. So every single one of these companies actually do agree the price should be over 600, and right now we're looking about 550. And according to tip rank, is actually strong buy. Let's have a look at one more thing before we move on. Okay, and that is the Sharia compliance side of things. It's 99.94% in terms of business side of things. Compliant. Interest bearing debt is only 17, and then when it comes to interest bearing securities is only 4% according to Zoya. Okay, the other thing I want to share with you before we stop the video, I don't want to make it too long, okay, is shares outstanding here. So shares outstanding has been up and down in the last 5 years, but right now it looks like they're actually buying, and they actually announced that they're buying more of their shares in the next couple of years. Okay, so hopefully that it will go downwards. Okay, even though we're getting really nice dividend, it will be good to also make sure that they're buying back their shares and not sit. Okay, total sales from 2012 right now to right now, look at that growth. That's absolutely amazing. Now, is that sustainable? So this year, the revenue estimates, okay, from the analyst, they're saying October of 2022, they're expecting $32.99 billion, and that is 20%, over 20% year-on-year growth. Okay, and then following year 2023, October 2023, they're expecting 34.8, okay, and that's about 5% growth. So it might basically start decreasing unless they start acquiring more companies and so on, because it's hard to sustain that sort of a growth, but they've done it so far. So, and I do believe they are going to do. So what's my plan? I'm definitely adding to this company in the next few weeks. Okay, I mean, in the next 2 months, my plan is to add more. I haven't done anything. The fact that it looks really undervalued at the moment, and based on what I've shown you so far, based on what I think about the company, the future of this company, I'm definitely going to start dollar cost average into this company and add a couple of more shares. If I can get to 10 shares, that will be absolutely amazing. But for now, I'm just going to dollar cost average. If I can buy half a share here, fractional shares and so on, I will be doing that. Okay, I think that's it. So that's all I wanted to share with you guys. If you are still here watching the video, I hope you have a wonderful day. Like I've always said to you, it's not a financial advice. Once you actually, if you're interested in this company, go and do your research, find out a bit more information, just like what I did. Go to their website, find out everything about the company, see the overview of the networking side of it, okay, broadband, every single thing. They have a nice presentations there that's going to help you understand the business, okay. And once you have your basically information, then you can make those decisions and then start looking at the growth of the business and so on. Look at it basically from you look at all the margins that we've spoken about today and so on. Have a wonderful day. Assalamu Alaikum.